Welcome back to the channel, and thank you for joining me. I'm Algabot, and on this channel we take apart automated trading strategies for MetaTrader 5 and study how they actually think. Today we're examining an expert advisor called Pressure Buildup Breakout. It's a pure price action approach, which means it uses no indicators at all. Instead, it reads raw candle structure to spot a quiet, sideways consolidation, measures the hidden directional pressure building inside it, and then studies the breakout when price finally releases. By the end of this video, you'll understand exactly how it sees the market and how each setting shapes its behavior. Let's get started. Let's start with the big picture. Pressure Buildup Breakout is a breakout strategy built entirely from raw price data. There are no moving averages, no oscillators, and no lagging indicators anywhere in its logic. Everything it needs is derived from the open, high, low, and close of recent candles. That makes it a clean example of how structure alone can define a trading idea. The core concept is the idea of pressure coiling under a level and then releasing. The strategy looks for what it calls a ledge, which is simply a stretch of bars that hold inside a tight horizontal band. The highest high of that band becomes the ceiling, and the lowest low becomes the floor. Crucially, the band has to be tight relative to how much the individual bars typically move. If the band is too tall, it's really a trend leg, not a genuine consolidation worth studying. Inside that ledge, the strategy reads directional pressure. It does this by looking at where each bar closes within its own range. A bar that closes in the upper half is treated as buyers winning that session, while a close in the lower half counts as sellers. When most bars in a flat ledge keep closing up against the ceiling, that hints demand is quietly absorbing supply. Then comes the release. The strategy waits for a freshly completed bar to close beyond the ledge, with aligned pressure and a clear expansion in range, before it signals a trade. It trades long above the ceiling and short below the floor, with distinct, mirror image rules for each direction. This style is designed with liquid markets in mind, such as major currency pairs or an index on the 15-minute through hourly time frames, though the code itself is timeframe agnostic. It suits a trader who is interested in structured, rules-based breakout logic and who wants to understand the mechanics rather than chase signals. As always, this is educational information only, not financial advice, and trading carries real risk, including the risk of loss. Let's walk through the logic step by step. The expert advisor acts only once per completed bar. On every new bar, it takes the bar that just closed and treats it as the breakout candidate, while the bars immediately before it form the consolidation window. First, it builds the ledge. Over the lookback window, it scans those bars to find the highest high, which becomes the ceiling, and the lowest low, which becomes the floor. The distance between them is the box height. At the same time, it adds up each bar's range and divides by the lookback to get the average bar range. These few numbers drive everything that follows. Next comes the tightness gate. The strategy compares the box height to the average bar range. If the box is taller than the max ledge range setting allows, it concludes this is a trending leg rather than a true consolidation, and it stands aside. This keeps the strategy focused on genuinely coiled, sideways structure. Then it reads pressure. For every bar in the ledge, it measures where the close sits inside that bar's range. A close in the upper half counts toward long pressure. A close in the lower half counts toward short pressure. It converts these counts into ratios so it can later check whether enough bars leaned in one direction. Now it studies the breakout bar itself. The strategy applies a thrust gate, requiring that bar's range to be at least the expansion multiple times the average range. This confirms real participation behind the move rather than a thin drift through the level. With those checks passed, it evaluates direction. For a long, the breakout bar must close above the ceiling plus a small buffer, and the long pressure ratio must meet the PressureFraction threshold. For a short, the bar must close below the floor minus that buffer, with short pressure meeting the same threshold. When a long signals, entry is taken at the ask. The stop is placed back inside the broken ledge, just under the ceiling by the stop buffer fraction of the box height. The risk is the distance from entry to stop, and the take profit is set at the reward multiple times that risk. The short side mirrors this exactly. Only one position per magic number is allowed at a time, so the stop and target manage each trade to completion. Let's read through the code you see on screen, just as we would in MetaEditor. At the top are the input parameters. Lookback sets how many bars form the consolidation ledge. A larger value asks for a longer, more established base. Pressure fraction is the share of ledge bars that must close on the breakout side, so raising it demands more one-sided conviction before a signal. Max ledge range is the tightness gate. A smaller number insists on a flatter, more compact band. Expansion multiple is the thrust gate, controlling how much bigger the breakout bar must be than the average range. Breakout buffer sets how far beyond the edge the close must clear, and stop buffer sets how far back inside the ledge the stop sits. Reward multiple defines the take profit as a multiple of the risk, and lots is the trade size. Now the signal block. This is the long case. The condition checks two things at once. First, BRK close. The close of the bar that just finished must be greater than high, the ceiling plus the buffer. Second, long ratio. The fraction of ledge bars that closed in the upper half must be at least pressure fraction. Only when both are true does the strategy proceed. Inside, entry is read from the current ask price. The stop, SL, is placed just below the ceiling by the stop buffer fraction of the box height, sitting back inside the broken ledge as a structure stop. Risk is simply entry minus stop. As long as risk is positive, the take profit, TP, is entry plus reward multiple times that risk, and the order is sent with the trade by call. The short side, not shown here, mirrors this logic exactly around the floor. This is for educational purposes only. Let's watch this play out on the chart. On the left, notice how price settles into a tight, sideways band. The dashed lines mark the ledge the strategy detects, with the ceiling above and the floor below. The band is compact relative to the size of the bars, so it passes the tightness gate as a genuine consolidation rather than a trend leg. Watch the closes inside this band. Bar after bar finishes in the upper half, pressing up against the ceiling. That is the long pressure quietly building, as demand absorbs supply at the level. Then the release arrives. A single bar expands well beyond the average range and closes decisively above the ceiling plus its buffer. With the pressure aligned to the upside and the thrust confirmed, the strategy signals a long entry. The stop is tucked back just inside the broken ledge, defining the risk, and the take profit is projected upward at a reward multiple of that distance. Price follows through, and the long target is reached. Now watch the second half. Price builds a new, tighter band higher up. This time the bars keep closing in the lower half, leaning against the floor, so short pressure accumulates. Once again, a bar expands beyond the average range and closes below the floor minus its buffer, with the downside pressure in agreement. The strategy signals a short entry, places its stop back inside that ledge, and projects the target downward. Price slides into the short take profit. Two mirror image setups, both built from nothing but raw candle structure. This is illustrative and for educational purposes only. So that's pressure buildup breakout. We looked at how it finds a tight consolidation ledge, how it reads directional pressure from where bars close, how it demands a range expansion thrust to confirm the move, and how it places a structure stop and a reward-based target on both the long and short side. Remember, everything here is educational information only and not financial advice, a recommendation, or a solicitation. Trading involves real risk, and losses do occur, so always study any approach carefully on your own. If you found this breakdown helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with any strategy you'd like me to examine next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.